What's going on, people? Welcome back to another YouTube video. So this is going to be a roundup of the month as well as the quarter. The quarter is coming to close. Q1 is officially out the way. In this video, I'm going to be covering exactly what I've experienced this quarter, what I've learned this year so far, and more importantly, what we can look out for on Q2, and what my watch list is. My watch list was very, very simple. This past 3 months, the first quarter of the year was extremely simple for me. Selling risks, selling rallies in the yen pairs, which, by the way, has been unwound the past 2 days. All the losses suffered on the yen pairs have been immediately reversed to the upside. So I'm going to cover that in today's video. More importantly, where they're going next, right? And how we're going to capitalize on this together. Hopefully 3 months from now, you can look back at this video and your whole Q2 was set by watching this video. Before I continue, folks, I have launched my store, my online store. It's called Traderlife.store. Go ahead and look it out on Instagram. Do stay tuned on the social media page. There is going to be a Life is Bullish collection. Do stay tuned for that. The store isn't live yet, but I have launched it. So follow the Instagram page. There's going to be more information there on when it drops, and it's going to be fairly exclusive. So if you see anyone wearing it, you know that was limited. But without further ado, let's jump straight in, and yeah, let's go from there. Right, my favorite trade of this quarter was selling rallies in the S&P, and the market was fairly range bound throughout February, which there again gave us the opportunities to sell the rallies. Right, as we know, if you are looking to sell something, you're simply looking for that risk reward to the downside. That should be your focus. First lesson of Q1 for me was realizing that there is always a risk reward. Your job is to go and find it, right? So as much as I wanted to sell the S&P, sometimes it just wasn't ready yet. And just because I wanted to be in it does not mean it's ready yet, right? So this massive little range there in February on the S&P, simply all that we done was selling the rallies out of 41.50. And there again, I'm going to show you something on the S&P, which you're going to go ahead and you're going to use this in Q2, right? 41.50 was a massive psych level for the pair, right? Later on in the month, we were selling out of 40.50, right? Later on throughout the month, we were selling out of 39.50, right? Those 50-point intervals on the S&P really make for nice round key psychological levels. Where are we resting again on the S&P current market price? 40.50. Right, so let's just go to the higher time frame for a second. 40.50, massive level. I like it, right? I like it. If it wasn't month end, quarter end, I'd actually be shorting this right now off the back of the contagion that's going on. Right, you got a further possible increase in the banking contagion. You had Joe Biden announce that the banking contagion is not over yet and further banks are at risk. If you're not aware of what's been happening, SVB, Silicon Valley Bank in America, went under. They went bankrupt. And they were the 16th largest bank in America. So very, very shocking to see that actually happen. But I do feel, with inflation remaining still high in the States, rates more than likely going to be heading higher. I know we're a lot closer to the end than we are to the start. However, I do feel there is going to be a lot more downside in risk. So definitely try and sell the rallies on that. My battery might die, but if you see this, love you, peace out. I'm not sure if I'm going to be able to shoot another one or not because I have to charge my battery and it's late. Love you, bye.